Hello and welcome to this webinar that we are producing with Range Developments. We'll just wait and see our attendee numbers coming in. We're going to get underway in a moment. We have a fantastic lineup of speakers. We're going to discuss the Nigerian and West African real estate market. We're going to cover the UK also, and opportunities to invest in the Eastern Caribbean region for citizenship and broader objectives. So we've got a great discussion planned today. I'm your host, I'm David Bell. I'm the founder of PCD, which is a networking organization for private wealth advisors. We've hosted a number of events with Range Developments, and this is the latest in the series. So I will introduce our speakers first of all. We're going to be taking questions throughout the session, so please do, the Q&A is enabled. We'd love to hear your questions and comments during the session, so please do put them in the Q&A, and I will put them to our expert panel live as we go on through. So to introduce our speakers, we have Paul Onwuanibe. Paul is the CEO of Landmark Group. He has 20 years experience in real estate projects in Africa, the USA and Europe. Paul is going to give us some insight on the Nigerian real estate market and also the broader West Africa region. So good morning, Paul.
Good morning, David. Thank you very much for having me.
Great. And our next speaker is Micheal Yanni. Micheal is the founder of YanCap, which is a wealth management business based in London that deals frequently with West African investors and those interested in the UK. So good morning, Micheal.
Morning. Thanks, David.
And finally, Mohammed Asaria. Mohammed is the co-founder of Range Developments. He's a lawyer by background, and in 2011 founded Range Developments, which is a leading developer, the most successful developer for Eastern Caribbean citizenship by investment programs. So good morning, Mohammed from Dubai.
Good morning, David, and thank you very much for hosting today's session.
Terrific. So with introductions done, I'm going to come to Paul first for an overview on the Nigerian real estate market, then move to Micheal, and finally to Mohammed. As I said, we'll take questions throughout. So Paul, could we just kick off by you giving us a sense of the overall trends in Nigerian real estate? You know, COVID has had an impact on all businesses, landlords, and commercial activity. How are you seeing that impacting on the market there locally?
No, thank you, David. I mean, it's a tough one. Someone said to me that there've been sort of literally 3 Black Swan events at the same time with the oncoming of the pandemic. And that whole multidimensional impact of it is still sort of playing out. But to understand where Nigeria is today, one would have had to have seen it where it was pre the pandemic, and sort of the strides it's made over the last sort of 10, 15 years. So for those of us in the audience that haven't sort of been to Nigeria for 10, 15 years, there's been a lot of progress with this sort of institutional quality of real estate there. So it's evolving. The institutional investors are increasing. There's been a gradual shift from the DIY developers to the institutional developers. There's been a lot of diversification into new sectors. So the info and biotech sectors are beginning to increase. Traditionally, Nigerian real estate investments surrounded office blocks and residential buildings. So that's moved. Also, the psyche has also moved as well, where a lot of people considered Nigerian real estate as a wealth store. And that's sort of moving now to more yield play and more economic drivers. So people begin to see what real estate can do in terms of driving the economy. And hopefully will play a big role in coming out of the lower cost by the pandemic. The last thing I'd like to say is there's a lot more transparency and authenticity in Nigerian real estate. So where it was 10 years ago, a lot of people literally just produced the real estate. You had to sort of go and see it and decide whether it was right for you or not. But now sort of standards have come in, and with not just the institutional investors, but with sort of more institutional property development companies, they're trying to produce better quality, better class of real estate and make a better social impact as well. You know, Nigeria is one of those countries that has a young, diverse population, a lot more people with a lot more money in their hands. The governments are becoming a little bit more transparent and a little bit more governing. So you know, that whole young, diverse, educated, and, you know, dare I say, entitled community are beginning to sort of show up, and that whole culture of ownership is taking place. So that itself is a driver for real estate. What will happen during this pandemic? I mean, it's been brutal, by the way. As I said, there were 3 black swan events. One was the pandemic itself. The other was the crash in oil prices. And then the third was literally the lockdown. And what that did, basically, it brought to a standstill economic activity. And, you know, real estate obviously was hugely affected just because of the long-term nature of real estate and the funding of real estate. So we've got to see, it's still on. So we've got to see how we come out of it. And obviously we're in the depths of that.
I saw a report recently about the strength of the startup and venture capital scene in Nigeria. And to what extent are landlords cater for sort of startup businesses in creating property products? Is that sort of not really part of the picture, or it's something that's being embraced as part of a bigger trend?
Yeah, so there are a whole new set of service offerings that underlie real estate now, which do help sort of startup organizations and begin to play some kind of role. But I think it's only fair to say, though, that the way real estate is looked at in Nigeria and the way it's used as well, and the shorter term nature of it, so the funding is shorter term, the lease tenancies are a lot shorter term. They're less based on covenant and more based on cash. So people tend to want to see their returns pretty early. So there's a big divide between how much social impact you can create, how much you can actually help startup organizations, and how much it can be a quick driver for the other sectors of the economy. So that's still developing.
Thank you. And I mean, how does the Nigerian market compare with other parts of the region? And when investors are looking at it, what kind of returns are on offer elsewhere?
Yeah, so to understand the West African region and the Nigerian market, first of all, you have to look at some of the statistics. There are 380 million people in West Africa, covering 2 million square miles of territory. There's 16 odd countries if Cape Verde is counted as a country. And anybody from Cape Verde, please accept my apologies. And the GDP is about 800 billion. Now, when you look at those stats, Nigeria have half of the people. Of the 2 million square miles, Nigeria is about 30% of that. So just in terms of the commercial energy and the economics of West Africa, Nigeria obviously is a huge player. And so with that comes several issues. I mean, so when you look at sort of the key risks in West Africa, you know, investor sentiment, you wonder whether, you know, the pandemic will make it so, you know, the commodity collapse. In some instances, it's not as stable as one would like. Fiscal slippage, the reform agenda that different governments have tried to put in place, and how far that's gone. We all heard what's happened in Mali in the last few days, and the political stability. So when you tie all those things together, because real estate is a long ball game and a long-term play, you need a whole set of things that work in your favor to make that investment. So I would say that when you look at the top 10 cities for real estate in West Africa, you probably only find 2 that are not Nigerian, maybe Accra and Côte d'Ivoire, Abidjan. So that tells you that probably 80–90% of the economic power of real estate is in Nigeria. But again, it's overpriced. There are a lot more opportunities in some of these other countries if you have a big heart and you're willing to sort of work out the longevity. But you know what they say in real estate: find out where the people are going and get there first. So if you do get there first and you make the right call, then obviously you would probably do well as an investor in real estate. You know, when I was preparing for this conversation, I was looking at sort of the statistics. So I didn't have these stats off the top of my head, by the way. So I was looking at the statistics of West Africa, and I read something, and it occurred to me that did you know that the richest man in the world in the 14th century was the Emperor of Mali?
Really?
Yes, Mansa Musa. He was actually the richest man in the world. Was certainly the wealthiest guy in the Middle Ages. I mean, obviously, a lot has changed, and that was all commodities. But And look where Mali is now. So it just tells that, you know, that whole push for better governance, more transparency, more empathy, more logic is very important in the real estate field and in the development field in economies in West Africa.
Okay, thank you. And perhaps building on that then, the sort of projects you would bring together at Landmark for investors, incorporating that sort of ethos, give us a feeling of what kind of projects you'd be bringing to the market in the past or in the present?
Okay, so Landmark Africa over the past sort of few years, I would say probably 5 to 7 years, has basically evolved from being solely a property development company to more of a destination creator. So we have unique businesses that we try to put together all under one roof. So to take an example of our Landmark Village development in Lagos, you know, it covers the best part of 180,000 square meters. It has leisure, it has lifestyle, it has hotels, sports facilities, retail units, educational facilities, health facilities, residential, and we have the second largest convention center in Nigeria there as well. And of course, there's a leisure beach too. So it's sort of well known. I think Euromoney last year gave us an award for being the most visited destination on the West African coast. We welcomed 2.6 million visitors last year. But as you can imagine, we preach togetherness. So this pandemic, you know, that determines social distance and has literally put a lot of things to a halt, but hopefully all that will come back. Now, the idea behind being a destination creator is some of the issues in West Africa always revolve around security, infrastructure, you know, things like that. So when you put everything in one place, you have a better opportunity to provide better security, put all the infrastructure in one place, and provide a service across all the real estate sectors that everybody can enjoy. So we're doing that in Lagos. We're seeking to do that in a number of other African countries, and it's a very important part of our concept. But you know, during this pandemic, we represent the people on ground zero. We're literally in the trenches. But as I say, the no roses without thorns.
Absolutely, as we all are trying to reconfigure business models and make a guess as to where we're going in the future. And I mean, for those kind of projects, they attract both local and international investors, or what's the kind of mix and how these projects are funded?
Yes, certainly. So they attract both local and international investors, and you know, through the Landmark portfolio, probably about 25-30% of it is international investors, and the balance of it is sort of between local and regional, I would say. But you know, there are challenges for both. There are challenges for the local investments and there's challenges for the international investments. And you know, without taking too much time, the challenges for the local investments will always revolve around sort of depth of investment. How much money is there locally to do something that's as asset rich and price heavy as real estate? And then the financial institutions are not as developed enough to give real longevity to the funds and at rates that most people can afford. From international investors, the real challenge is just the stability of the currency. So you come in with the dollar, and today it's 100 naira, you know, tomorrow it's 200 naira. So when you're putting your money out, I mean, you could be making a naira profit, but a huge dollar loss. So, but as the institutional real estate companies, developers, and covenant becomes more important, and lease terms are longer term, and the legal structure gets better, then the more international investment in real estate begins to take place, and we're seeing a lot of that. I mean, people have had a bloody nose because of this pandemic. As you can imagine, the shopping centers have all been shut, the leisure facilities have been shut, all the entertainment facilities have been shut. So the only businesses from a real estate perspective that got bang for their buck were the residential, because people were staying at home. And then people then realized what it means to have good quality real estate, because if you had to stay at home for 4 or 5 months, then you know the quality of the residential community you're in actually does begin to count. And so we've seen a lot of that. There are many misconceptions that one has to dispel as well in Nigeria or West Africa, and that whole idea that it's not always fit for purpose, that it's not transparent, that there are a lot of cash transactions. So all that has gone away. The reality is it really has evolved over the last 2 to 3 years. There's been a real kick in the butt. last year.
Many thanks for that insight, and do get your questions in for Paul, which we'll put to Paul and our panel at the end. The Q&A is open, so please do use that. So, just coming on to Micheal now, talking on the UK. Micheal, I mean, you've dealt with clients in West Africa, but Nigeria specifically, over a long period, looking at their affairs and from a wealth management perspective, so the total asset base. What's your read at the moment on the strength of demand for the UK as a place to live, but also invest from clients in Nigeria?
Thanks, David. I think it's really quite an interesting discussion piece, and it's something that has evolved very much in the last few years. I think to take it back a little bit, just to run through a simple exercise that I do with my Nigerian clients, is we kind of sit together and try and add up their total assets around the world. So we look at everything. You know, I think for a lot of clients, actually, they're so preoccupied dealing with their business and all the challenges there on the ground in Nigeria on day to day, especially with things like currency devaluation and oil price crashes and government changes and regimes and so on, that they're so preoccupied dealing with their business in Nigeria, which is really the source of their wealth creation, that they actually find it difficult or don't often take a step back to kind of look at the bigger picture. So a lot of what I do for them is to kind of just help them understand where their wealth is actually placed. Quite often we find when we go through that exercise, adding things up, that they're very, very, they have a lot of their wealth in real estate around the world. It's just an asset class that they're very comfortable with, that they feel is a good store of value. They've probably had a lot of success over the years in creating a lot of wealth, buying properties and seeing them go up in value, or having properties be rented out to generate a stable income for them. But what's been interesting these days is that actually, historically the currency pairing between the Nigerian naira and sterling, or the naira and dollar, has been relatively stable. In the last few years, the naira has taken a big hit. The devaluation has actually affected a lot of people's net worth. So now when we go through that exercise on paper, we see a lot of people who have a tremendous amount of naira real estate, but that now represents a lower percentage of their net worth. So actually, they've been reliant on income generated from a portfolio of naira, of Nigeria-based properties. So that's in naira. But by the time they convert that to meet expenses in the UK or the US or anywhere offshore, school fees, bank interest rates, that kind of thing, they start to see actually it's costing me quite a bit to hold some of this. So there's, the older generation and the younger generation have very different views. The older generation have created a tremendous amount of wealth by investing in the UK property markets quite early on. So we're talking 20, 30 years ago, buying kind of a family base type of apartment or home in Knightsbridge, kind of top tier locations in prime central London. And now, maybe as the patriarch or matriarchs of certain families pass away and and these assets flow to the younger generation, they have a very different view on UK real estate. They're now looking at it with the lens of being in an environment where the currency play is very different for them. What they're able to, their expenses associated with holding these assets in the UK have really started to escalate in the last few years, especially now with things like oil price crashing, and with Nigeria actually being in. I mean, a lot of clients tell me they see it as being in a recession for the last few years. It's really been a tough environment for them to generate wealth, and so when they see that they're holding legacy properties in places like Knightsbridge, for example, another exercise that I go through with them is to see, we just sit down and just ask quite simply, why are you holding this property? Or why do you want to buy property in London? Why do you even want to continue holding this property that you have? And then everyone's answer is quite different. For some people, it's much more of an emotional attachment, that the property's been in the family for a long time. They want to have a base. For a lot of people, it's actually, and they tell me it's we want to dispose of it, but it doesn't look good on us actually if we're selling that property. People will assume that our business is not doing well, that we can't afford to keep this property. I have to maintain that base and that image. The younger generation have again quite a different view. We're able to sit down and say, okay, fine, you have this property in Knightsbridge, it's in a trust, you have a loan on it from a bank, that's how it's financed. Let's add up how much it's actually costing on an annual basis. And they quite quickly start to see that actually maybe this isn't the right thing for me at the moment. You know, all my expenses are in sterling. I have interest and principal to repay in sterling. I have various taxes to pay, ATED, I'm paying service charges on the property, I'm paying council tax for central London locations. And then on top of that, they kind of have all the maintenance and so on of some of these old properties which need a bit of a refurb now and then. So they quite quickly start to see that for a property that they travel to maybe for a total of maybe 3 months of the year, and because it's a family base and a family holiday home or a London home for them, it's not something that they want to rent out for the rest of the year. So they're not making an income, and now all these expenses in sterling become quite cumbersome for a lot of people, especially when their main source of income is a rental property, which is in Naira. By the time of converting that to meet these expenses on a monthly basis, it becomes quite a challenge. So I've seen, you know, for a lot of clients, there's still a massive affinity to London. They really want to raise their family here. They want their children to be educated in the UK, for example. They see themselves maybe transitioning out of Nigeria in the future to a more stable economy, in their opinion, in terms of healthcare, in terms of travel, in terms of education, in terms of stable currency and stable government. Even with all the issues that we have, things like Brexit and so on, you know, there's still a massive push, especially in the younger generations, to actually transition out of Nigeria. So, you know, real estate is a massive part of that. A lot of my clients are actually saying, well, having had this discussion together over the last few months and gone through this exercise, we actually will start to think about disposing of some of our Nigerian real estate. A lot of them are even actually saying, let's dispose of UK real estate because it's just costing us too much relative to what we're able to benefit from that. Even in terms of, if it's not an investment property, you know, are you getting enough utility from that property? Are you actually enjoying it? Are your family spending time there, or is it dormant and empty most of the year? Does it actually make sense for you to maybe sell that, repay your loans, shut down the structure that's holding it, not have to pay all the taxes, service charges, all these bills, and actually get some of that liquidity back in sterling and let that work for you? I've kind of helped a few clients with a disposal of their real estate, actually, when they realize it doesn't make sense in their portfolio anymore.
There's a market now for very high-end rentals, isn't there? You know, ultra premium rentals on this kind of basis, that people have got an asset that's sat there. So once you've analysed the case for this historic asset that they've held, then you might propose to them a new type of property investment, or, you know, a financial investment, or then you can look with more, you know, you've realised some liquidity there and can be reinvested in a variety of ways. Is that the way?
That's right. I mean, I've helped a lot of clients actually. You know, sometimes they've come to me saying, I want to buy real estate, or I need a cheaper loan because the one I have is just too expensive. Can you help? And then we sit down and go through this exercise and ask, why do you want to continue holding this property? What benefit are you deriving from it? But do you know how much you're actually spending just to continue holding this property? And a lot of clients really don't. They get their bills on a monthly or quarterly basis, and they just find a way to convert Naira to sterling to meet those obligations, and they're constantly actually under pressure to do that. And that's regardless of how wealthy that individual is. It all actually comes down to liquidity and how they're able to generate liquidity in the correct currency, because they can have a lot of income being generated in Naira, but by the time they're able to meet all their dollar and sterling obligations, it's quite challenging. I've seen clients who are extremely wealthy that struggle to actually pay school fees for children on a monthly or quarterly basis, because they have to actually take funds from Nigeria in Naira, convert those, send them over. So it becomes quite cumbersome. So for a lot of clients, when I have this discussion with them to say, look, why don't you actually, I mean, and it's been successful for a few clients where we've said, look, for you to hold this Knightsbridge property worth £2 million, it's costing you about £200,000 a year by the time you add up everything. In Naira terms, that's double what it was costing you maybe 5-6 years ago when the currency pair was quite stable. Now that the Naira has been devalued, it's a very expensive luxury for you to have this property in Knightsbridge that you use 2-3 months of the year. So then they start to kind of move away from the emotional attachment to the property to actually start to realize that this is financially, this is costing me quite a bit. And we start to think about, okay, fine, if you were to rent the property, how would it look? If you were to sell the property completely, how would it look? And I have a client in mind that I've done this transaction for a couple of years ago, and we actually sold their property in Knightsbridge and found them a property on the floor below in the same building that they'd been used to living in for the last 20 years. They literally moved their furniture down a floor, pretty much the same floor plan, and they're paying about £35,000 a year to rent that property. And now they've repaid all their debts, they've shut down the structure, they don't have any ongoing liabilities, and they just pay a year up front to be in Knightsbridge. They have their furniture there, they have their clothes and their luggage, they kind of have that comfort attachment. A lot of clients don't like the idea of, okay, when I travel to London, I have to find a hotel or get an Airbnb or something like that. The younger generation are much more flexible with that than the older generation, who want to have that base or that comfort and say, you know, to say I have a place in Knightsbridge,
Okay.
for example.
Are you seeing the next generation of West African families, maybe you're educating in the UK, been to school, university here, redeploying some of that capital and energy and contacts and ideas into the region where they spot opportunities because those opportunities seem to outweigh opportunities to invest in Europe? Do you see that as part of the picture, like, you know, that ultimate redeployment of some of that capital back?
Yeah, definitely. I think it's, again, this is it's less of a financial discussion with clients now than maybe it was historically, where it was all about the numbers. Now it's much more about their convenience, the benefit that they and their family will get out of various property, and actually the reason for redeploying those funds back into Nigeria. Are you just saying that I can make 15% in Nigeria, but I can only make 3% in the UK? And are you driven just by that attraction to the higher yield? A lot of clients discount the risks with certain markets, or they actually haven't. They feel that they have a bit more confidence almost playing in their home market than they do in the UK. They feel they can spot opportunities or be connected to the right kind of opportunities in Nigeria. But again, we try and have that discussion holistically, and I'm definitely seeing clients looking for opportunities like that, where they say, you know what, my property in the UK is not going to make that much. Stamp duty is expensive. If I put it in a structure to protect it for my family or make it tax efficient, then I have to pay more expenses on that to trustees and in terms of ATED and various ongoing taxes. So I think they find that the ease of transaction in Nigeria may be a bit more appealing. The route from making a decision to buy a property or to develop a block of flats, for example, to then completing on that should be a bit more cost effective than doing it in the UK with the various layers and expenses that they'll have. So it's definitely, it depends on each client and for their own situation, but they are seeing it as a part of their portfolio. Historically, I think, and Paul, you probably have seen this as well, the older generation, if you sit down and look at how much of their total assets, their total wealth is in real estate period, we're probably looking at above 70-80%, because any money that they make from their various businesses in dividends or sale of a business or sale of oil and so on, they're usually saying, okay, as soon as I make these funds, I'm going to redeploy that into, I'm going to buy a block of flats, I'm going to develop some land, I'm going to buy property in London and rent it out, or property in London for my kids when they go to university here. And then we take a step back a few years later and look at the bigger picture, and you realize actually all of your wealth is in real estate. And the problem with that is that it's not always liquid. So that's where the challenge for a lot of clients starts to, they're very asset rich and cash poor. So on paper, do sell, I have 100 million of real estate. When we actually look at what currency that is in, it can be very different. When we actually when we sit down and look at, okay, if you needed to actually turn that into cash, how long would it take? If you're holding an investment or if you're actually holding cash, it's very difficult. And I find a lot of Nigerian clients end up being very illiquid because their wealth tends to be made up in two main sections. Real estate being one, which is illiquid, especially in Nigeria, which is just harder, I believe it's harder to dispose of than real estate in the UK. And second, their wealth is made up of their private company holding. So you could say my oil company is worth $50 million, but again, that's not something that you can actually liquidate and take out $50 million of cash. By the time you've found somebody to buy that business and value it the same way that you wish it was valued and actually go ahead with that transaction and then convert those funds and bring them offshore, you might find that even if you're able to do that, it may just take you a very, very long time. It may take years. So there's a lot of clients who kind of start to feel that their net worth is very high when they look at it on paper, but when they see, what they can actually get in terms of liquidity to meet ongoing obligations and things like the Naira devaluation and COVID and businesses slowing down in terms of their earnings potential and the revenue they can generate, really start to move the discussion away to, okay, how can I actually just pay my bills, keep things going, keep my family safe, maintain our standard of living, as opposed to just say, oh, I'm worth X amount on paper. After a while, that doesn't really start to mean very much if you're struggling to kind of meet these ongoing bills.
Thank you. And we'll come to Paul right at the end just for his thoughts on some of what Micheal was saying, just to sort of get his view. But I'd love to bring in Mohammed Asaria right now, just to talk about some of the work he's been doing with Nigerian high net worth investors. I mean, Mohammed, COVID has created an external shock to mobility, particularly people used to moving around between multiple homes and properties and different centres. I mean, how can the sort of second passport assist West African families who want to maintain some mobility in these difficult times as things return to normal and people start travelling once more?
Sure, thank you, David. So historically, the second passport industry has been driven by a couple of drivers. One is mobility, and also the second is actual migration, the desire to live somewhere else. So let's touch upon the first one. So as pertains mobility, an investment in Grenada, which then qualifies you for citizenship, provides you the ability to travel to 140 countries around the world without the need for a visa. That's the UK, the Schengen zone, Russia, China, and 135 other countries, India, Latin America. So it's pretty fantastic in terms of global mobility. And even in this day and age, an American can't travel into the Schengen zone, but a Grenadian can, a Dominican can, because that's, given it's such a small island, COVID hasn't been a problem. It hasn't had a massive effect on the healthcare system. So individuals holding second passports are able to travel. And I mean, Paul is probably closer to this than me and some of our audience. I understand that, if you're trying to leave Nigeria and you're trying to get on a repatriation flight to a third country, only people who have second citizenship are permitted to make that journey at this moment in time, back to their home or back to a third-party country. So second citizenship has been really essential for the West African investor today to provide that requirement of global mobility. I mean, it's hard enough getting a visa in a normal time, but COVID is putting borders higher and higher. And, this is why, notwithstanding the pandemic, the desire for people to pursue a second citizenship by investment journey, the numbers have risen exponentially during this time. It's created an inflection point. The anxiety, the three black swan events, whether you're in Nigeria or whether you're in Russia or another emerging market, have really given you the chance to look at life through a different lens. And, you know, mobility may be one of the drivers why people look at a second citizenship. But to put on top of that, people are worried about social unrest, political insecurity, and economic boundaries being risen. And a second citizenship can provide a hedge against some of these, as well as a hedge against some of the items which are reducing capital flows or constricting the flow of capital, whether that's government imposed or otherwise. And then on top of that, a lot of people during this day look at their current home and they say, you know what, it's not working for me anymore. And then they might look at London, or they might look at the United States or the Middle East. A lot of people are actually looking at Dubai today. The country has handled itself very well during this COVID period, and are saying, well, I want a second citizenship, which also provides me the ability to live in a more established market, should I wish to execute on that. And that's where the product that we're offering at the moment with the Grenada Second Citizenship is unique, because it provides individuals the ability to invest and reside in the United States within a very short period of time. So, you know, there's a whole bunch of factors today which are really pulling people towards having dual nationality or triple nationality. So it's an interesting dynamic.
So how can with the citizenship by investment route in Grenada, how can that help the next generation of Nigerian families who want to go and start businesses in the US, reside over there? Perhaps you explain a bit more about how that works, why it's attractive.
Yeah, so look, let me take you back in history to 1983. David, you and me will remember this. I think the other members of our panel are younger than us. But jokes aside, in 1983, Grenada was invaded by the United States. As part of the reparations of war, they entered into something called a Treaty of Trade and Commerce with Grenada, in which was memorialized the E2 Treaty. What does the E2 Treaty say? That if you're a Grenadian and you invest in your own business in the United States, there's no minimum amount, but you know, the consuls like to see a figure of $100,000 or more in your business plan. You invest in your own business. You know, you can set a business up, you can buy a business, you can acquire a franchise. You apply for an E2 visa at the nearest consulate. You obtain that typically within 6 to 8 weeks. And immediately upon obtaining that, you can go and live in the United States for renewable 5-year periods. Your spouse can accompany you, he or she can work anywhere. Your kids can access the US school system on the state side below 18 free of cost. And between 18 to 21, they get discounted university fees. And on top of that, if you're not in the US for 122 days, you're not taxed on your worldwide income. So, you know, it's a very versatile tool, and especially with President Trump causing some changes to the US immigration system, to put it lightly. The EB-5, the green card program, the price was exponentially risen at the end of last year. The waiting times, I mean, if you're from certain countries, you've got to wait in excess of 10 years to obtain a green card. And I think there's a permanent ban or a ban at present upon certain West African countries, including Nigeria, to apply for an EB-5. So Grenada has become an established route into the US as a proxy to the EB-5, as well as a proxy to the L1 visa category and the H1B visa category, both of which were recently suspended by President Trump. So if you look at it, you've got a Nigerian family. They wish to expand or diversify into a more established market. I think COVID has taught all of us not to have all your eggs in one basket. So the strategy is you invest in Grenada, obtain second citizenship, then you make an investment in your own business in the United States, and within 6 months, you can set up your own business there. Maybe one half of the family will go there and further develop the business, whilst the patriarch or matriarch will continue running the business in Nigeria. And it's also very useful for the kids or the grandkids if they wish to access the US system. And what's really neat about the E2 visa is that you're not taxed on your worldwide income. So David, irrespective of where you live, if you became a US permanent citizen or obtained permanent residency in the US, immediately upon obtaining that, you would be taxed on your worldwide income. And if you didn't like that scenario very much, you'd have to pay an exit tax for the benefit of giving up your US citizenship. So it's quite an expensive affair, which a lot of people aren't generally aware of till they get the first bill. Whereas with the E2 visa, because it's called a non-immigrant visa, if you're not in the US for 122 days, so imagine you spend 121 days in the US, you spend 80 days in the United Kingdom, a couple of weeks in Dubai, the balance in Nigeria, you could structure your affairs in a very sensible, tax efficient manner that you're only taxed on the US side on your US sourced income. And that's a really attractive thing for a number of individuals from West Africa, especially as they look to diversify into more mature markets and don't want to put the whole empire into the US tax bracket.
And how does the real estate component, how does the investment side work of the Citizenship by Investment program?
Sure. So we are a developer in the Caribbean. We've been active in the Caribbean since 2012. We've built some landmark hotels. We opened the Park Hyatt in St. Kitts in 2017, named #1 hotel in the Caribbean by CNN and Condé Nast. We had a similar experience in Dominica with our Kempinski, which we opened in 2019 to similar reviews. And we were invited to Grenada at the end of 2018, worked with the government to restructure the citizenship program with a couple of tweaks, which made it really enhance the appeal of the program in terms of pricing and how many people you can add to an application. And we're then developing the Six Senses Hotel there, which will be another landmark development and hopefully make our hat trick when it opens in 2022. We're building 100 rooms spread over 28 acres of land, 20% built-up area, 31 swimming pools, a truly spread out resort where it's all about natural distancing rather than any imposed social distancing. So it will be a perfect destination for the luxury traveler in the post-COVID era. And the way the Grenada Citizenship by Investment program is set up, you're required to make a $220,000 investment according to the law in a real estate investment. So we've structured it as a real estate investment trust. An individual makes an investment and then applies for citizenship or concurrently applies for citizenship. There's a period of due diligence. And once the government approves your application, subject to you having a good background and being a good character, you close on that investment and you obtain your citizenship within a 3 to 4 month period in total from the outset. So it's a very versatile tool. There's no need to reside. Individuals have completed the process from beginning to end digitally during this whole period. And you know, where we pride ourselves and taking from Paul's expression, we're an institutional developer when everyone around us is a DIY developer. So unfortunately in the Caribbean, maybe we're a few years behind in Nigeria that we're the only institutional developer there, and we welcome other institutional developers because it'll really uplift the whole tourism industry. You know, we're unique in that I think we're the only company which have actually been able to execute and build branded residences, citizenship or otherwise, in the islands in which we operate over the last decade. So there is definitely an opportunity in these lovely islands, which are so close to the US and which have a large captive market for individuals to develop hotels. And we look forward to welcoming other institutional developments. And we hope the whole market can progress along that way. But for now, we're proud to say we're the only ones who delivered.
Okay, and how do you contrast the sort of Grenada program with other jurisdictions that might be offering citizenship by investment schemes?
Sure. So look, I categorize it into two: countries which offer visa-free travel and countries which offer visa-free travel plus migration. There's 5 or 6 countries which only have the visa-free travel, and I would say their appeal is declining during this process because people are also looking for a second base to call home. And on the countries which offer migration as well as visa-free travel, you have Grenada, if you've got a US strategy, and you have Malta and Cyprus if you're looking at an EU strategy. Both of those, Malta and Cyprus, are significantly more expensive than Grenada. But if your strategy is the EU and you want a citizenship within a very short period of time, you've got to go down that route and pay 10 times the cost of Grenada to obtain a Cypriot passport. But what we're seeing at the moment is a move to people saying, okay, you know what? Let's take a Grenada citizenship. We get that within 3 to 4 months. And for our EU strategy, let's go and buy a piece of land there. Let's go and invest in Portugal, which has a golden visa program. And we get the best of both worlds. because you need that second document, that second citizenship to travel. You go and get your E2, so you have access to the US. And then individuals are saying, you know what, let's go and buy a golden visa, or let's go and invest in property in Portugal as well. So we've completed our US strategy, our EU strategy, and we've got our second citizenship from the outset. We don't have to wait 7 years till our golden visa ripens. And you've basically covered all three strategies within a quarter of the price than you would have either going down the Malta or Cypriot route. So that's what savvy investors are doing at the moment. They're marrying up all three to provide that flexibility they need for their businesses and their families to thrive in this post-COVID era.
Very interesting. And we're just going to open it up now for questions. But Paul, I just wanted to bring you back in to just build on what we're discussing with Micheal. Just sort of say, you know, the next generation of families who maybe came young to the UK, educated here, went to university here, have a network, have, you know, contacts and capital behind them. Are you seeing them redeploying in capital back into, you know, Nigeria, West Africa, spotting opportunities and capitalizing on them, or what are you seeing in that sort of arena?
So if I get your question right, the people who are Nigerian,
families whose offspring have come to the UK, they're fully educated in the UK, they're very ingrained in the UK, they live in London, they're networked here. Are they spotting opportunities back in their, you know, their home country, if you like, for investment? They're just more exciting, more engaging, better returns than European investments.
Absolutely, and I can speak firsthand about this because I in many ways I'm an older version of the same thing. So I was born in the UK, grew up in the UK, went to Nigeria for my university and secondary school, came back to the UK, worked in the UK, and decided to go back and invest in Africa. My children obviously are very, very British, but they recently, as they got into their 20s, they recently decided and realized that there's a place outside Britain that they would like to align to. So they go on holidays a lot in Africa. They've been to 30 odd African countries, and I can see one of them, if not both of them, relocating to Africa at some point. So one of the things that you will see a lot of, as the African governments become a lot straighter, a lot more, they have a lot more empathy, a lot more logic, a lot more transparency, a lot more authenticity, you'll find out that what we call the diaspora, the people who effectively have African origin, right, but European or American passports, they will come back because a lot of that money, my understanding is that $25 billion every year is remitted into Nigeria by these people, and remitted on three things: health, education, and real estate, right? Because those are the three undersupplied sectors of the economy. And you say to the government, if you want to know what people want to spend money on, if you want to know where to spend your money, then look at what people are spending money on, right? But you know, so as these governments get better, I think you will find a lot of people, even within Landmark in Nigeria, for instance, we probably have the best, probably maybe 15%, 10 to 15% of the staff have lived somewhere else and relocated. So a lot more people are trying to come back to add value, to look at opportunities, and in many ways, sometimes, you know, without being too topical here, it's to be treated better. I think a lot of people think that, you know, there is a place called home, and like my children didn't realize the difference in how they were treated until they started going to Nigeria often, and then realized that, you know what, I like this place. I'm treated much better. I have a lot more opportunities. I can make deeper friendships. And you see a lot of that. And it happened with me. I came back for the same reason. I just re-engaged with some of my old friends.
It's quite exciting, that fusion then of like the best of the UK sort of talent and network, and the international melting pot that is somewhere like London or New York, and the energy that can create then for reinvestment. I mean, you seeing something similar?
Yeah, absolutely, and it creates energy. It also creates a lot more people, even in Nigeria, that link up with these people who come back. So it improves both sets of lives: the people who are relocating back and the people who actually were in Nigeria, and it increases their outlook. When my children come back, they come back with their friends, and their friends are American and British. They've never been to Nigeria before. Many of them have never even been to Africa. So they come to our resort in Lagos and spend time there, and they realize that, you know, there is another world and there is an opportunity here. The big issue we had in Nigeria over a long period of time is that most of the people who have disposable wealth felt the only way to keep that wealth and to enjoy that wealth was to take it abroad. That trend is changing. So, you know, diversification, I think, is important, and I think with the crash in the currency, it makes sense to have to diversify, right? But a lot of people are realizing that there are opportunities both in Africa and in Europe, and you don't have to look at opportunities just on one end. I mean, there's a balance, and as Micheal basically said, it's important to look at it with a lot more detail. So because you get more bang, you need to get more bang for your foreign currency now that it's a lot more expensive than it used to be.
And do you think there's a sort of pent-up demand for the next generation going abroad and making their way? You know, like Mohammed talked about the E2 enabling someone to go to the US and set up a business, and it could be a subsidiary of a known business. Is that sort of thing exciting for people and being something that they really want, or what's, you know?
Yeah, no, absolutely. So one thing about, and let me speak for Nigerians rather than Africans. So I say Nigeria, maybe West Africa. You know, we are obsessed with choice, and we're obsessed with travel, and we would like to have the choice. And so that whole, some of the things that Mohammed has spoken to, you know, it's so important for people to have choice, and for people to have choice, that dual citizenship is actually quite important, right? And it's not because they want to go and live in America, but they want to be able to go to America, set up their business, send their children or to Europe or America, and still come back to Nigeria. And you find the bulk of their investments may actually be still back in Nigeria, but they want that choice. And a lot of people want their children to experience life outside Nigeria. You know, sometimes it's actually quite stressful in West Africa, just because there's not that amount of choice. As I said, we're developing mixed-use communities, so people can actually stay in one place, and you're shielded from all the infrastructure challenges and the security and the traffic and stuff. You actually don't see it until you're going to the airport and coming back from the airport. And, you know, someone said to me once, if you provided an airport in Landmark, I'll live here. And I said, well, you wouldn't actually live here, because you wouldn't need an airport if you were living here. But people like to travel. Nigerians do like to travel, and they do like exposure. And, you know, I think it's important. You know, last year, because of the things we were trying to do, I took my entire staff to Dubai. So the entire Landmark staff in Nigeria, we went to Dubai, and we stayed in a resort for about 4 or 5 days. And we went to look at some of the resorts and some of the influences that we wanted to bring back to our place. Because now 70% of these people had never stepped foot outside the country, had never left Nigeria. Some of them hadn't even left the region. Right? Many of them didn't have passports. We had to get them passports, and we had to get the visas and stuff. But it was really, it was quite rewarding, because they did come back, and they put in a good shift. And you know, I felt we were privileged to just have people who not only wanted to go, but actually wanted to come back. Yeah.
Fantastic insight there. Micheal, I mean, you're nodding away there. On that point of choice, and Paul saying, you know, families, wealthy families, built businesses want some choice. I mean, what do you see from your perch in the UK?
Well, I mean, I think we could have another couple of hours to discuss just this point, but I mean, really, without sounding too philosophical, what's the point of being high net worth and having all these options and all this wealth available to you, a high level of education, successful business, a lot of support in your framework, if you're not able to have those choices and make your own choices, really? So a lot of what I discuss with clients when they're saying, should we look at this, should we look at that, or I have challenges here and I have opportunities here, I say, well, look, you're in a privileged position where you can actually, you should be trying to get the best of both worlds. I think, like Paul said as well, that they're very different worlds, and these clients have a base in at least 2 countries. So, for example, Nigeria and the UK, Nigeria and the US. They should be in a position where they can think about how to actually benefit from both worlds, really. They should be able to take advantage of, for example, if you're looking at wealth creation, Nigeria is going to surpass the UK infinitely in terms of the opportunities to build a business, to actually develop real estate, to make double-digit kind of returns on their business in an environment that these people are, that they understand, that they're brought up in, where they have connections, networks. They understand how the inefficiencies in business and in politics can present challenges that they can try and set their business up to correct for. And then in the UK, for example, they can have much cheaper borrowing than they can in Nigeria. If you're borrowing for your business in Nigeria, it's going to cost you double digits. In the UK, especially if you're set up with good private banks and wealth managers, you can borrow at under 2-3% and actually be able to take some of those funds back to develop your business and give you a competitive advantage. So I think, you know, a lot of my clients, you know, I used to travel to Nigeria 4 or 5 times a year, but I actually see my clients much more in London now than I do, again, pre-COVID. I'm hoping things will start to go back to that. I'm seeing everybody on Zoom these days, but it's actually, you know, I don't have to leave London very much to see them come in. They all have property in London. Their favorite shops are here. They have businesses here. They have people that they're discussing business transactions with in London who want exposure to Nigeria. I'm seeing a lot more of that as well, where actually it's not just the Nigerian clients that I work with that are bringing funds to the UK, but actually a lot of people in the UK saying, look, Nigeria looks super exciting. I know I can make good returns there, but it's a challenging place to do business. It's difficult to kind of get past the due diligence and actually find the right opportunity for them to bring funds to. So a lot of what I do is try and connect people in both environments. And actually, I have a lot of my clients who are saying, look, I'm thinking of doing this business in the UK. The office space that I use in Mayfair is a shared office space. And I have a client who is actually trying to develop something like that in Nigeria because he's spent time in London, he spent time in New York at WeWork type of facilities, and he's now trying to take that idea back to Nigeria because, you know, he's taken that education and that experience and what he's seen in that second market that he has exposure to, and he's trying to bring that influence back to Nigeria. And I'm seeing a lot of clients doing that kind of thing where they say, you know what, when I grew up in the UK and I was at university here and I worked here, I had all these experiences which are lacking in Nigeria. So now they try and take those back. Similar to what Paul said as well, actually, about trying to build a community to really what Paul's doing, if I can say it simply, in terms of the resort type area that you've developed, is you're correcting for the frustrations that a lot of Nigerians have with security, with infrastructure, and you're bringing all those things in one place. But I think if they didn't have the experience of actually being outside of Nigeria, going to university here, working here, and actually building that experience, you know, when they take that home, they can do infinitely better in their experience and developing their business over there. So I'm seeing, you know, to answer your question shortly, David, choice is super important for the kind of individuals that we're all working with there.
Thank you. And Mohammed, I mean, just to build on what Paul was saying, he echoed your comments from earlier on choice, but also as we come to the end of this hour, just sort of the sense of opportunity for you as a business working with clients in West Africa, why you think it's important to be talking to people, what you think this offers them, and what people should do to find out more about Range and the initiatives you can offer out of Grenada.
Yeah, no, I think exactly what Paul and Michael have said. Life's about choice and having flexibility. And that's really echoed at a time like this. And and again, I know this session is focused on West Africa and Nigeria in particular, but everyone in an emerging market, and again, borrowing from Michael's words, has a better earning potential than living in a more mature market, or it's quicker to obtain critical mass on a business. If you have the local knowledge and the local skill set. But that obviously comes with a level of insecurity being based in an emerging market. By definition, there's higher risks on a day-to-day basis, higher political risk, higher rule of law risk. And to offset that risk, that's where we come in and we provide that backup plan, that comfort blanket, should something go wrong. And I think that's why our product has really been gaining traction across the emerging markets in West Africa in particular, because it's inexpensive. At the end of the day, you can remove some of the prejudice and challenges that is created by your citizenship or your single citizenship, for $250,000 or $300,000 for your entire family. So it's an inexpensive hedge to some of these challenges. How you find out more about us, we'll shoot everyone across an email. And yeah, we're more than happy to chat more with anyone who's interested.
Terrific. Well, and that draws us to a close of this session. Many thanks to Paul, to Micheal, and Mohammed for chatting with us today, and wish you a good day ahead.
Thank you. Appreciate it, David.
Thank you very much.
Thank you.